we might be seeing the exception to the rule that the end of summer signals a slowdown in the market. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, September 4th. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as a home seller or buyer. This week, we had another drop in inventory, down to 50 homes, down from 59, and the average asking price jumped up a little bit to $1,825,000, down from $1,775,000 last week. 8 homes went pending, one less than last week, but noticeable here is the drop in average asking price for those pending homes, down to $1,785,000 from the $2,054,000 we had as an average last week. 4 homes closed this week, 2 less than last week, and again another price drop here in the closing sales price, down to $1.623, down from $1,881,000 last week. So now we know how the market performed this past week, and now we like to look ahead at the broader trends that help us determine where the market might be heading. Before we do that, if you find this information helpful, why don't you hit the subscribe button? That way you don't miss out on future updates. And while you're at it, share it with a friend as well. Everyone deserves to be in the know about their local real estate market. Okay, let's look at those broader indicators. Starting with the inventory, like I said, inventory has come down all the way to what I would consider a very normal inventory level for San Ramon. Anywhere between 40 to 50 homes on the market at one time is very average inventory for San Ramon. And if the trend of the past few weeks continues, we could see inventory drop into that sub 40 range soon. With the inventory coming down significantly over the past few weeks, the turnover rate has continued to climb. We are now just under 75% of normal, the line here. That is a significant improvement over the 45% mark the turnover rate was sitting at just last week. The turnover rate might be the most obvious indicator for the health of the market, so an improvement like we saw this past week is a great sign. The over-under number also improved this week. It wasn't as dramatic of an improvement as the inventory or turnover rate, but any improvement when the under number has been close to exceeding that 2% mark is a good sign and encouraging for the overall health of our local market. With all the improvements in the previous indicators, it might come as a surprise that the average sales price dropped. It didn't fall much. It's down about $60,000 or 3% from last week. However, I do still expect this number to jump up in the coming weeks, since the past few weeks have had higher average pending prices. Not this past week, but the few weeks before this. So we'll hopefully see this sales price jump back up here in a little bit. The Triple Q continued its slow but steady increase in price at the beginning of the week before it dropped off and settled in, breaking even with where the market had closed at the end of last week. While it did improve this week, I still didn't improve at the end of this week. I still consider this a winning week because the fund is holding at record level highs. The health of this fund should continue to support our housing market, even in the midst of general economic uncertainty that we're experiencing everywhere else. To round out this week's market recap, we're looking at a little more positive news. The interest rates improved again this week, dropping to 6.5% for the national average. The average hasn't been at or below 6.5% since last October. So this is a very welcome sign. Rates are still too high to impact affordability all that much, but if they continue to creep down, we could actually start seeing significant shifts in the market health. Usually the end of summer signals a slowing down in the market. Of course, rules are made for exceptions, and it looks like we might be experiencing an exception to that rule this year. The market has been so slow this year already, so any shift in positive direction will feel like a significant improvement. The decrease in inventory, along with a reduction in interest rates, might mean we will get back to or get an uptick in the market movement at the end of the summer instead of the normal fall market slowdown heading into the winter hibernation market. Thank you for joining me on this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so you stay informed on how the market is shaping up this year. And if you have any questions about how you can navigate the stressful and often confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe weekend, and we'll see you next week with a new update.